Hi Viren, good afternoon.
Good afternoon. Good afternoon. Vishal.
Thank you so much for joining us for this ongoing series, Viren.
My pleasure. My pleasure.
We're really glad to have you with us. So, Viren, you've had a phenomenal 30 years, 25, 30 years as an investment banker. You started your career as investment banker. So, before we get into the Q&A, if you want to add to your journey so far as a banker, and then we will move towards your experience in the healthcare industry. How has that been over the years?
No, seems like a long time. So I started in 1999, started in investment banking. Initially more sector agnostic, healthcare was always a part of it. But only in last 10-12 years I've started focusing exclusively on healthcare and life sciences. Prior to that, in my stints at Morgan Stanley and SBI Caps, I was looking at a few other sectors and looking at M&As and capital markets. So got a lot of product exposure, all the products, whether it's capital markets, IPOs, M&As, private equities. My last few years at JM Financial and my entire 8-year career at Spark Capital has been more on healthcare and life sciences. In fact, exclusively on healthcare and life sciences. I was leading it when I left JM Financial, and I sort of continued the same role at Spark Capital. So I have indeed seen the transformation of the sector way back when I did the IPO for Fortis in 2006. There was only one hospital chain listed at that time, and I remember people wanting to play the sector, and therefore, despite all the challenges, they were interested in looking at Fortis. So we sold Fortis on the basis of sector story alone, because Fortis didn't have too much at that time. What we see today is a very robust network of hospitals. At that time, perhaps Ascot's was the only main asset. So we have seen a transformation, and that belief in the sector has played out, and how, right? Because people said it's a sunrise sector, and people said over a period of time the sort of incidence of lifestyle diseases, affordability, insurance penetration, pricing power, consolidation. I mean, all the big trends that we talk about, like norm today, were only being expected at that time, right? And nobody was sure. But we have seen, a lot of scale up which has happened. Very small companies becoming, multi-billion giants over the span of 20 years. So have been sort of, in a way, a long stint allows you to witness the transformation, corporatization, growth, different kinds of cycles, liquidity events. So it's been a very, I would say, enriching journey. So looking forward to the conversation. Thanks for having me here again.
Can you take us through your journey in the healthcare, how it has transformed? You talked about hospitals, right, with Fortis evolving over the years. How has hospitals or diagnostics evolved over the years?
Right. So I would say, I think hospitals and diagnostics very different. Right. So what we have seen in hospitals is scale becoming very, very important. Right. And for various reasons. So it was always a theory that scale will give you advantages, but in practice how it works is it allows you to negotiate better with insurance players, and increasingly, I mean, big trend is that insurance penetration has gone up. It's going up by a few percentage points every year. And health insurance is a very, very rapidly growing sector.
Correct.
Right? So you put that together. So once you get larger, over a period of time, what will happen is the insurance will become dominant, and therefore larger chains will be in a better position to sort of talk and negotiate. So that's sort of one scale benefit. The other benefit is the clinician supply. Right. So earlier, maybe 20-30 years ago, clinicians wanted to have their own practice. That was like the most preferred option, and they didn't want to work for anyone. Now, if you see, barring a few Western markets, and there also things are changing.
Yeah.
They want to work with a large corporate chain which can give them advantages of technological exposure, volumes, medical education, so on and so forth. Visibility which comes with it, right? So I think they an ethical environment, patient first, and a lot of chains are focusing. So that being larger gives you a disproportionate advantage in terms of being able to attract talent. Right. Third is obviously on the operational side. You have the usual capex, opex synergies. You have a large P&L. People want to talk to you, and you can get the best terms, whether it's medical equipment suppliers, consumable suppliers, right? Your opex, operating leverage, all that starts playing out, right? So I think the scale has become important. That has continued to drive consolidation, right? So consolidation, which is internal consolidation, where people are trying to do brownfield expansions, become larger in their areas of strength, right? So it could be the location, the broader location, or the facility itself, right? So a lot of people like NH, for example, NH is expanding in Calcutta and Bangalore, right? Big time, because they have their space. Likewise, Apollo, I think they will want to exhaust whatever expansion potential they have in their existing market. New market expansion is also happening. For example, if you are strong in Chennai, then you will want to go to a Trichy or to a Madurai, right? So you want to get into tier 2. You would not make an entry into Trichy, right? You want to be strong in Chennai. You want to be strong in Mumbai and Pune before you go to places like Solapur, Nashik, those kind of places, right? So that internal, external consolidation of organic as well as inorganic sort of consolidation is happening. So I think hospitals, you have insurance penetration. Scale is becoming very, very important. Yeah. On the diagnostic side, it sort of went through a cycle, right? So during COVID times, diagnostic chains went through the roof because a lot of COVID testing was happening. Yeah. And at that time, you also saw the advent of many new age diagnostic players, right, who were focusing on preventative testing. So what we have seen on the diagnostic side is, so in fact, diagnostic is being opposite of hospitals in terms of how they've grown. Hospitals were able to drive a lot of ARPOB growth, and maybe a balance between ARPOB and volumes. Whereas for diagnostics, a large part of growth has come from volumes because there was pricing pressure. Correct. And as a result, diagnostic companies, they bundled their tests, and you see likes of Dr. Lal, Metropolis, Thyrocare, or even new age chains, Redcliffe, Healthians. These guys, they promoted wellness packages, and that sort of put a new paradigm in terms of customer expectations, right? Both in terms of pricing as well as in terms of consumer experience.
That's also because of better awareness of preventive care or access to preventive care for people? Maybe I think post-COVID?
Yeah. So a lot of these new age chains were sort of raising funds leading up to COVID, right? So the conversation that you had was, you guys are not focusing on consumer surveys, you guys are not focusing enough on tech, right? You don't have for example, if I walk into a large, I don't want to take names, but if you want to walk into a large diagnostic chain and you're walking in for the third time, you will not have a simple comparison of what your parameters were 2 cycles ago, right? So those kind of simple things were missing. But once these guys came in, they sort of home collection became the norm, convenience became the norm, having that kind of tech and data became the norm, right? Yes. And after that, you saw acceleration of that trend.
It also increases the repeat
patient, yes. Right? And then bundling of the test. So if for example, if you do a vitamin B12 test alone, $1,000, vitamin D test separately, another $1,000. You combine the two and offer it for $1,200, right? Something like that. So your per test pricing has gone down, which explains why pricing has not, ARPOBs have not sort of, in case of diagnostics, more price per test has not gone up so much. It's more, the growth has been driven by volume, which is a mirror image of what has happened on the hospital side, where there is a good sort of mix. Maybe ARPOB growth has been higher because hospitals have been able
access has grown, increased.
They have been able to sort of drive the what you call the patient mix,
Yes.
and the specialty mix, and then reduction of a loss through technology. So all those trends have happened. So it's just phenomenal how some of the large chains and their CAGRs of ARPOPs in the last few years. And they were starting from a reasonably high base.
Correct.
And this is like overall averages. So if you look at certain of their facilities, they are massive, right? So for example, when again, to put in context, in 2006, in 2010, 2012 also, if a hospital did 1 crore per year per bed, that was like, talk of the town, right? This hospital is like really premium, right? Now you translate 70,000-80,000 ARPOB, it's already 3 crores, right? Into 365, right?
Correct.
So it's already 3-4 crores, and some of the hospitals do more than that. And some of the hospital chains actually report EBITDA per bed, and their EBITDA per bed is closing in on a crore, right? Because if you're making 4 crore per bed as revenue, you make 25% EBITDA margin, then you're making a crore per bed on the EBITDA, right?
Correct.
So that actually is a trend which a lot of people were not comfortable underwriting 10 years ago, but actually it has played out. That it's not. I mean, there is some pricing increase. So, for example, if ARPOPs have grown by 10% CAGR, maybe there is 2-3% contribution of absolute price increase. But a very significant part has come from because people have been able to change their specialty mix and the consumer mix, right? So doing more private and those kind of things have. But I think going forward, we need to see as insurance penetration goes up, how, and now these numbers are public. So earlier people used to say when hospitals were making 12-13% EBITDA margin that we are not making enough money, right? Return on capital is barely enough. Now you're making 25-30% margin, then it is interesting to see how insurance companies negotiate
sustainable
going forward, right? So how the trend from here on will be interesting. So I think diagnostic and hospitals, I think while it is the similar sort of macro sector, but
operating model is very different.
Operating model is very different. Yeah.
And the definition of preventive healthcare as a concept has changed significantly post-COVID. Now it includes mental wellness and so on and so forth, as you rightly touched upon. So while that has obviously increased the volumes and to an extent ARPOB due to the bundle pricing, but what would be good to hear is in terms of how has the investment thesis evolved, or how are the investors looking at all these allied sectors post the COVID onset.
So diagnostics is very interesting because everyone, I mean in the last few years you had the traditional Dr. Lal's Metropolis of the world who were there. B2C, B2B, different mixes. I mean, Dr. Lal and Metropolis were more B2C, and then Thyrocare was largely B2B. And then you had regional chains like Vijaya, and then B2B, sort of B2G models like Krishna, right, which also came to the fore. All of them, got backed by private equity. And then there was this new age, Healthians and Redcliffs and, Orange Labs of the world who sort of looked at it from the point of view of consumer and said, what is broken in the sector from a consumer experience and a pricing standpoint. How can we fix it and how can we disrupt the sector?
Where is the real need coming from?
Where is the real need? So they raised money, which caused a little bit of flutter in the sector. What has happened is that pace of fundraise has slowed down, and therefore the traditional sort of diagnostic chains got a little bit of breathing space to sort of get their act together. Right? So I think on the preventative side, yes, I think investors have invested, I think until about a couple of years ago, but now I think they are looking for what is different. I mean it's if you are saying that I'm going to discount and bundle the tests and I'm going to compete on price, that's not enough. And that's why I think you are seeing and it happens in all the sectors, right? You start in a certain way, you create a brand for you, and then you try to do the brick and mortar things like so for example some of these new age chains are expanding into expanding the distribution network through acquiring and getting into high-end diagnostics, so again filling the geographic gaps as well as the capability gaps through their
accessibility is going to be key to make it accessible to more and more people, right? Because awareness has gone up.
And I think diagnostics also saw entry of the reason why I said it was interesting is it also saw entry of pharma companies, right? So people like Lupin, they sort of entered. Mankind, of course, has a Pathkind, which is not I think owned directly by Mankind, but maybe by the promoters. But that's their venture. And then even hospital chains like Max and Aster DM and all these guys. So I think one thing, a related point is we are also seeing hospital guys. While I think internationally you see a lot of it where people try to create an integrated network, which is that I'll have hospitals, I'll have diagnostics, I'll also have pharmacies, I'll have clinics, to sort of make a very integrated and then overlay it with tech to create a very integrated network. Now, in India, I think different players do different things. There are health tech companies, there are diagnostic companies, there are hospital companies. Now, you are seeing initial signs of that integration playing out, right? And Apollo is perhaps most evolved because they have this full AHLL format where they have all the single specialties and clinics and sugar clinics and diagnostics and mother and child all put together. NH is doing it a little bit, and then you have Aster DM, of course, a little bit of pharmacy and diagnostics. So Max has labs and home healthcare, right? So you are seeing a little bit of integration happening. Yeah. Today, I think people are looking at them as separate businesses. At some point, they will start integrating once the market is ready. But today, I think the way people look at multi-spec as a different business, capital intensive, very, very value accretive if you do things right? So I think they are focusing on that, right? I mean, in diagnostics, I think in order to generate the same revenue and EBITDA, you need to put in a lot of effort. And it is sort of low entry barrier business, right?
And ROI is much better, much faster.
Much faster, yeah.
Good. I agree.
Yeah, so see, we're in a lot of transactions happening in this sector, a lot of smaller players getting consolidated into the larger player, to your point on consolidation happening, access going up.
Yeah.
What are some of the challenges that promoters face in raising capital and eventually exiting in your experience?
Yeah. So I think if you take a step back, right? So one, I think strategic and while I think some of the transaction issues will be common, but strategic is different from fundraise.
Correct.
Right? I think because when somebody is raising funds, the promoter is the investor is coming forward and partnering with the
growth
management.
Capital
it's growth capital. So the lens is very different compared to when an existing strategic guy wants to acquire something for consolidation, right? So I think their key parameters are very different. So from a fundraising perspective, I would say that the first issue is the kind of execution and the management team good sort of execution in healthcare is in short supply. And I presume it's for all the sectors, but because healthcare is a younger sector.
Also at that scale.
Right? I mean, the sector has exploded. People want to sort of, become bigger and, do IPOs. So there is so much pressure on the talent market. And it's in short supply and it's sort of grown pretty fast. I mean, while it's 20 years is a long time, but, it's also very rapid journey that people have seen. So that is putting some pressure and in terms of being able to find the right execution teams, which is perhaps the single most important challenge from a fundraising standpoint. Of course, you see, if you keep the valuations aside.
This is management teams you're talking about.
Management teams. Yeah. So, generally what happens is typically a doctor promoter starts it.
They're able to take it
scale it up to a certain level, then they start, setting up more. And then they suddenly realize that it's not, you can't run it like each unit, and you need to have integration and management team and all that. You want all the units to contribute, and perhaps selection and the execution both are very important, which can be done better if you have a solid management team, right? And for whatever reasons, these are like family-run businesses, so they never feel the need to professionalize to that extent. Because costs go up, and ultimately some people argue that you're going to get the valuation on the basis of your profitability, so why sort of burn it? But I think there is a balance that needs to be had. Of course, there are DD issues, usual sort of data reconciliation, and I'm sure I think you work with a lot of companies, so you understand that. Tax issues, so, because just as they don't have fully baked management team for the front end and execution, they don't have back end teams also, right? maybe a
Comfort
CFO
over the
or
data.
sort of maybe CFO is maybe a company secretarial or the legal kind of team to keep the house in order, right? So that is another challenge that you see, and then of course I think from a private equity standpoint, if there is doctor dependence, clinician dependence, then they would want to solve for that either by a sort of long-term, medium-term strategy or getting into contracts, making sure that the doctor sort of continues, and which is sort of fine in case of a minority because they're going to stay on. From a strategic transaction standpoint, I would say that maybe 3-5 years ago the biggest challenge was that it was a buyer's market, right? So you had like one buyer for an asset. You knew that this buyer is going to do this deal because right up their alley. But then you couldn't create competition because other guys are focused on their own thing, right? And because they were smaller, they had only so much appetite, and these platforms were not there. Right? International interest has always been episodical, so I don't think much has changed. But I mean, you can't rely on some international coming in and buying your facility or your chain. So the dearth of buyers to create a genuine competitive tension was a concern earlier. I think it's become more balanced now. So a KIMS which is in Hyderabad and Telangana and western parts. So they want to deepen in western parts. They want to go to Bangalore. They want to go to Kerala, right? So if I have something in Kerala, I can go show it to KIMS, right? I can show it to obviously Blackstone. I can show it to KKR, right? So you are seeing interesting mix of competition sort of emerging, right? And then you are able to discover. Otherwise,
price discovery is easier.
Price discovery is easier, right? So I think that has evolved. I think it will continue to evolve, and for some priced assets, which are like really premium, really sought after, it's like completely a seller's market because then the seller decides what they want to do. But I would say for largely, if it's a decent asset, decent location, then it's a very balanced market today. You are able to...
There's enough transactions to give you a sort of view on the pricing.
View on the pricing, and right? I mean, I could say your asset should be valued at 15 times EBITDA. But unless 3 buyers come and tell me that value, it's only a discussion between you and me.
People
right? So
pitching for the asset.
Yeah. So 3 people come and say 14 times, I can push it to 16 times, right? Because there is competition, and people are worried about the asset going away to their competition.
Correct. And while there are in Indian market we do so reasonable traction, but what about the international investors? Well, there has been a steady flow, but do you see any renewed interest from the international investor community in terms of the new age sectors and the traditional sectors as a whole, and how they view vis-a-vis the Indian investors?
You mean diagnostics?
Diagnostics, hospital chains.
Hospital chains, single specialty.
Yes.
Right. So we are, I think it's sort of just like pharma, right? Where you had deals. Daiichi came and acquired Ranbaxy, and Abbott came and acquired Piramal, right? So 80% of the transaction, in terms of number of transactions, have happened domestic. I think likewise, even more so in hospital because it's such a domestic sector, right? It's like domestic consumption. You need to understand the local market. The market is so different, right? So compared to market in Europe or US, the market is very different. So in order to, I think while we have been able to get some conversations of late, I think earlier people from West will not even come and talk because they say, India is just too far, right? I mean, why bother? It's like completely, B2C kind of a market, where there everything is paid by the insurance. The pricing is very different. The cost structures are very different. And then the market is still, by their own standards, a little small. Right? Now the small part is obviously getting addressed, but the difference part is still there, right? I mean,
it's largely dependent on cash payments.
Right? So which means that you are having conversations. I think in the past we saw change from South Africa, people like Netcare, Life actually did a deal with Max, minority deal with Max before they exited. So we were seeing 1 or 2 such guys showing up in processes and wanting to talk, sometimes occasionally putting in a bid also. IHH of course is in India. I mean, which is like one player which has been there, and for them India has been a key market. So they have done a bunch of transactions, right, at various points in time. Currently they have a position in Fortis. So barring that, I mean, from Southeast Asia, we have seen a couple of guys sort of coming in, but still I would say that this is very episodical. This is very sort of on and off.
Yeah.
So it's not a trend. I mean, if I wouldn't be able to go and say with a straight face that we'll get international interest for this asset, because it's not there. I mean, maybe the interest is there, but they're not yet ready to do a transaction. Exception is very, very differentiated assets, right? So if it's a really differentiated asset, maybe people want to.
Aster DM wants to expand in India.
Aster DM, of course, wants to expand in India, but
because they've all been there.
They've been there. I mean, Aster DM I would also almost count as an Indian player, right? Because they obviously had a lot of Middle Eastern operation. Now that's also sold off. So they are now predominantly or completely an Indian player. So I think So I would say that it's still some time before we see sustained interest in M&A transactions from
healthcare as a sector, even globally.
It's
always mostly it's been a domestic play.
Most domestic play.
Right? It's less of a international.
Quickly touching upon considering the way in which the various government schemes have come up. Many of the underserved market has come mainstream, which has considering the population of India, there's a huge amount of needs to be addressed. So has that impacted the investment decisions or the way expansion decisions of the international players?
International players, I think all of them will be almost exclusively metro focused. Right? So people are like Bombay, Delhi, Madras. Perhaps Chennai, but not even Chennai. If at all they want to go into markets, they want to go into markets where
quick scale up is possible.
Where the scale up is possible, where there is a market which can pay for the kind of clinical protocols they're going to bring and the kind of infrastructure they're going to bring. So their thesis is complete differentiation, provide the kind of clinical care and the experience that an Indian patient has not seen, and therefore attract those kind of doctors, really sort of showstopper clinicians and very, very premium patients, right, who can pay for it or who have insurance cover to be able to pay for it, right? So I think that is possible only in large metro cities when we as of today. Of course, other markets will develop. Maybe what is tier 2 today will become tier 1 tomorrow. I mean, Pune being a very good example. I mean, Pune, earlier people used to call it tier 2, but now it is almost like coming like Bangalore, right? And also the other advantages, markets like Delhi, Pune, Delhi, Bangalore, Hyderabad, they can take in a lot of chains, right? So I mean, earlier I remember when we were running something for a Bangalore-based hospital, maybe a couple of decades ago. At that time, there were like 3 or 4 players in Bangalore who were prominent, and people were worried about oversupply. Right now, Bangalore has everyone, and 5 other guys wanting to enter. Right, so maybe in 10 years, Bangalore will have 15 healthcare players, and all of them you will know by name because they are large guys. They want to have a play in Bangalore because they think they can create, they can have a larger catchment, by sort of having in Bangalore. They don't mind being a number 8 player in Bangalore because it's an very important. Earlier, I think when you used to have this conversation, they say, "Oh, we lost it in Bangalore. We can't be top 3, so we don't want to go there." Right? Hyderabad people used to say maybe much after that, more recently until about 7 minutes.
What changed that dynamics?
So it's how the market has evolved. So if you decide that
also because people have more access because of these government schemes.
Government schemes, I think they're not necessarily looking at government schemes. They're looking at private patients.
So what's changed?
What has changed is maybe the kind of facilities that they're able to build in a city like Bangalore, right, or in Delhi, or or in Bombay, or in Hyderabad. These are larger facilities. So the larger the facility, the higher you are in terms of continuum of care, the greater is your catchment, right? So you are you think that the reason why there are so many changes is because that market is not only local, it's like a healthcare hub, right? So earlier, traditional mindset will tell you that, I need to have 70-80% of my catchment of my, patient walk-ins need to happen from the local market only. But for larger markets, that's different, right? You have sort of, regional tourism, drainage from cities, which are far, far away. Because if you are the doctor, people will come in, right? I mean, people fly large distances to come to AIG or, to go to Medanta in Gurgaon, right? Those kind of
maybe
things.
also because affordability has gone up and because of post-COVID, people have started focusing more on healthcare, health-related issues.
True,
right?
true. So I think affordability has gone up. Insurance, I mean, you are sort of seeing more people more than adequately covered or, reasonably covered.
Awareness is also increasing.
So I think all those things, and these are obviously, the market is also awarding them. That's also one reason, and there is so much capital chasing. So whether this will result in an oversupply situation, I'm not commenting on that. But what I'm saying is, people did worry about this earlier. Now people are wanting to do more, right? I mean, Hyderabad, while people don't want to enter, some people don't want to enter, but I think people are expanding, right? And then sort of, people like Yashoda and, Medicover, they're sort of building more facilities.
It's still under-penetrated, but the quality of healthcare obviously needs to go up, where people start getting confidence in the healthcare sort of systems and processes. What is your view on the tier 2, tier 1 cities penetration happening there? That is one. And two, on the single specialty hospitals. There's a lot of single specialty hospitals coming in oncology, derma, and a few other areas. So what's driving growth of single specialty hospitals?
So maybe I'll take the tier 2 question first. So tier 2, and I think it's different for multi-spec and single-spec. So because single-spec is multi-spec, the key difference is that you want every facility to do well. I'm not saying single-spec you can be casual about expansion, but for example, eye care center takes you only 8 crores to set up, whereas a multi-spec, good multi-spec can peg you back by 300-400 crores, right? So obviously you can't take a chance with the 300-400 crores, right? So the location becomes very important. You need to think about doctors, patients, the quality, the kind of facility, the future expansion potential, how much you can build, what you can do, what is your brand in that market. You absolutely want everything to be checked out before you make that commitment. So therefore, tier 2 has been a little, I would say, selective, and it's different for different players, right? So, like I said, Apollo, if they're strong in Chennai, which they are, then they will have confidence to go to Madurai and to a Coimbatore or to Coimbatore may be an exception. It's not a tier 2 market; it's proper healthcare market, but maybe a Trichy or those kind of markets, right? Somebody who's sort of strong in, for example, Jupiter was very strong in Mumbai, and that allowed them to go to Pune. And then do another one in Mumbai and do another one in Pune, right? Those kind of things, right? And likewise, Kim's when they came acquired Hiranandani in Thane, they started expanding in that region to sort of places like Sangli and Nagpur and Nashik, those kind of places which are like tier 2 locations, right? So once you have a foothold, I mean, unless you are like a tier 2 focus model like Cygnus, which is a very different strategy, and tier 2, like we are having that conversation, can be I would say a different facility in the same metro, or it could be a different location. Right? So Cygnus, I think, has followed both. It's a more tier 2 focus model. But if you see the larger models, then they will want to have a strong presence in that region and then take a selective call on which tier 2 cities what are the dynamics, right? I mean, for example, if for a very long time, Mysore did not develop as a proper healthcare market because people were traveling to Bangalore. Right? So if you set up something, people are used to traveling to Bangalore, right? So how do you, then I think it's a call to take that long-term commitment and say, I'll set up something massive in Mysore and then, change people's behavior and ask them to get treated in Mysore only, right? But they're used to Bangalore, and Bangalore has like 30 offerings that it's not too far, right? But over a period of time it changes, right? Because people don't want to travel, I mean, because the habits change. But you need to take a call. I think we are seeing acceleration of that, and more tier 2 markets are coming to fore. And earlier, the discussions with a lot of these large chains and platforms will only be focused on metro and tier 1. But now tier 2 is firmly and squarely part of the conversation, right?
Yeah,
there is selective interest. And if there's strong, in one part they would want to bolster their presence in some other parts of the same. I think the call that multi-spec guys take is whether the market is developed enough for doctors to go and stay there.
Correct.
That is the key call, right? Because patients, their thesis is always patient travel. Patients always travel, right? They will go to wherever there is facility and wherever there is a doctor.
Correct.
But is the doctor willing to sort of relocate to that facility and stay there, simple things like, whether they will have a lifestyle and whether cities evolved enough, whether there are enough recreational avenues, because ultimately, they have a family to take care of. So I think that's the key call. And then also the supply of doctors over a period of time, which sort of drives this decision. And of course, the market potential, right? Now coming to single specialty, Single said that there are certain specialties and parts of healthcare where the need is there. You can carve it out because it works for the doctor, it works for the patient, and it works financially, right? So mother and child, very good example. Doctors want to feel important in a multi-spec system. They are not that important because there are other specialties which are considered higher, and therefore can you give them an environment where they are the sole drivers of their destiny and of the hospital's destiny. Likewise, eye care, IVF, so I think those sort of, and of course, the unit model needs to work, and you need to have enough ticket size, and you need to be able to construct the P&L on a per unit basis. To make profit and return on capital, right? Correct. Which sort of works for these facilities, whether it's pediatric and IVF and mother and child and opthel, and to some extent, some of the other, the newly emerging, maybe Euro and Neuro, which is say people like R.G. Stone and Asian Institute of Nephrology and Urology, those kind of people, or Dharma you mentioned, right? So I think to some extent this works. Maybe primary care doesn't work because the ticket sizes are very small. So if you want to, people who tried to formalize the GP practice alone, they were not very successful because the unit model doesn't work. The retail costs are too high, right? So I think that's how the single specialty.
Capex is also low, right?
Capex is low, is capital light, right? And it's sort of. So what has happened is when earlier, all the classes of investors, they wanted to play all the segments. Now we are seeing a clear distinction. Correct. Single specialty, of course, everyone is interested because it's capital light, and it sort of gives you good sort of private equity like journey and without lumpy exposures. And if you have good management teams, they're able to execute on those plans. Whereas multi-spec, you need ability to write larger checks. You need staying power for longer because the gestation is longer. Correct. So you're almost seeing, and over a period of time, this will deepen further the sort of split, the divide between people who want to go for multi-spec and single spec.
So you see more consolidation also in multi-specialty.
Consolidation.
So you decide on scale.
For example, if you're backing a hospital, right? If you're writing a check for a single spec and you are a $30-40 million investor, you can do that because it's capital light, and in $30-40 million will move the needle significantly, right? For any chain, because if it takes only 5, 6, 7, 8 crores to set up a eye care center, good eye care center, then they can set up many with this kind of money. But look at hospitals, right? So one hospital and entire capital is gone, right? Correct. So what do you do? How do you do the next one, right? And plus, that hospital, this single specialty will break even, ramp up in 1 year. This will take 4 years, 5 years, right? So by the time, if you're writing $40 million check, and if you have a 5-year perspective, right, then unless you are timing the investment and doing a little bit of momentum investing, maybe it's not the right investment specification for you. Yeah, it's the right investment specification for somebody who is writing 200, 300, 400 and has balance in their back pocket to do more, and they have a 10-year view, right? Then of course, it makes more sense, because, it takes, once the return compound, they sort of, obviously
Yes.
will give you a very good multiple, but very little will happen in the first 3-4 years, which is very different from single spec, right? So I think the reason why single spec is so much on the radar is because it works for all the investors. Right? Larger investors can play larger ones.
Turnaround is quicker. Yeah.
Turnaround is quicker. I can be $100 million investor. I can be a $30-40 million investor. I can write the this thing. There's a consumer healthcare element. There's a branding element, right? And we have seen. I mean, we did in the initial sort of, we did work with people like Cloud9 and Surya and CFS and IVF, Wings IVF, those kind of players, AHLL. So we saw, people sort of very, very wide set of people looking at these opportunities, because they could see their capital making a difference and multiplying in a relatively shorter time frame. So that's the reason why the interest continues to be there. In hospitals, we think that there will be, before the big scale consolidation happens, there will still be a lot of players. In single specialty, in every segment, you'll first see leadership emerging. So, for example, in eye care, you have Dr. Agarwal, ASG, and CFS, right? Top three. But it's not that those three can cover the entire market. So there will be regional chains. There will be second leg of this thing when more chains will emerge. Maybe long term there will be some consolidation, but you are seeing a little bit of clear leadership emerging more on the single spec side, right? So likewise in mother and child, you have Cloud9 and motherhood, and you had Apollo's Cradle, which sort of may or may not be sort of strategic for them, but I mean these were 2-3 chains which sort of emerged, right? Pediatric, you have people like Rainbow, right? So I think you have very selected niche sort of number of players. Yeah.
The last thing from my end is, you see this sector continues to demand a high valuation, right? That's maybe 20 plus, 25. Yeah. Do you see that continuing for the foreseeable future?
Yeah.
Maybe the last couple of comments on that.
Sure. So we have seen actually the valuation expand for larger players, right? So if you see all the larger guys on the hospital side, right, on the hospital side, and in the private, because single specialty not much is listed. No. So on the private side, I think we have seen, because there are fewer number of large players, and you want to play the sector, you have only 2 or 3 guys that you can invest in. So there is pressure on valuations. So the larger guys, the key takeaway for us is that the larger guys have expanded in their premium. So it has gone up in absolute sense. So people who are trading at 25 times are now trading 30 times. And people who are trading at 30 times are trading at 35 times. But the gap between the mid cap and the large cap has widened. So the mid cap guys are trading at mid teens, low teens kind of multiple. So there is like a 2x, 3x difference because of the scale, right? And I think it takes to the first point why scale is important, right? So scale gets a lot of premium. Whether that will continue, I think the question is, if you look at the growth profile, ultimately the valuation is a function of what kind of growth are people expecting, right? Of course, there is moat and entry barriers and scale advantage, but all that needs to translate in terms of numbers and cash flows, right? So if you see stable larger chains, right, they're growing their top line at 10-15%, right? Of course, people who are expanding, outside of their markets are growing faster, like, but say, the national chains, right, they're growing at 10-15% on the top line. And then there is margin expansion, which has sort of resulted in, so what happens is you grow at 10 to 15 on revenue, you grow at maybe 20 on EBITDA, because, you get some margin expansion every year because of operational efficiencies and all the good things. And then on PAT, because you're deleveraging, you get even further growth, right? So it's been like, 15, 30, 40 kind of, template. I'm growing revenue by 15, 10
So it will be a factor of how growth you can sustain.
What kind of growth you can sustain, right? So whether you can drive our RPOPs, whether you can drive 25% margin, you're already 25%. How much more can you go from here, right? Because that margin expansion is over. So I think people will watch, and I think which is what happened on the diagnostic side, where you saw a lot of up and down in terms of valuation. So it will be interesting, but obviously I think scale benefits are for everyone, and they will consolidate, right? So they can always go and buy out chains at 12-15 times. So the question is, and if chains are willing to partner with them, they will continue to grow.
Yeah.
So maybe Max has shown that they can grow significantly by doing acquisitions, right? So they're very acquisitive. Manipal has been very acquisitive, right? So those guys have actually pushed the pedal when other people were not acquiring so much, right? So Max was doing transactions when the M&A market was not so robust. Manipal was doing deals, and so I think they are now reaping the benefits. Yeah.
So thank you so much, Virendra. Thank you for your time. I think this has been wonderful getting your insights. We'll catch up and hear more from you.
Yeah.
So thanks again for coming. Anything else, GL?
No, I think very well summarized. The session was quite insightful.
Yeah. Thank you so much, GL. Thank you, Vishal.
Thank you.
Thank you.